Hi everyone, you've tuned into Buy Now Sell Now Weekend. I'm Mobina Kapasi.
Hi everyone, I'm Avan Dabash. Well, we've got lots lined up today on the show which is dedicated to you, the viewer. In fact, we will be discussing some stock queries today. We've got lots of them on ONGC, JSW Energy as well as Motherson Sumi.
And as always, we'll have a portfolio segment, and this time we'll be discussing Ashish Madhavan's portfolio.
Okay, time to bring on board our experts. Joining in on the fundamentals, Gaurang Shah, VP Geojit BNP Paribas Financial is with us, and on the technicals is Gaurav Bissa, derivatives analyst at LKP. Thank you so much for joining in, gentlemen. Now, first up, we take on an email query. Nishant Doshi, he's a regular viewer, and he sent in his question via email all the way from Dubai. Nishant, thanks so much for sending in your question. It comes in on ONGC. Well, he's got 400 shares of ONGC purchased at a price point of 290. Now he wants to know if he should hold, sell or buy more shares. Please advise is his query. So let's just get straight to it and delve into ONGC's fundamentals. Recently, it signed an MOU with Halliburton and this was to outsource production of oil and gas. The company will be giving out the Gujarat field to Halliburton and give out the Assam field as well to another company, and the oil that produced will belong to ONGC. They're also seeking the extension of the Sudan oil block license. ONGC currently trading at about 307. No great shakes for our viewer here. So let's find out how Nishant can really maximize on ONGC. And Gaurang, I'm going to come to you first. It's been a pretty stellar week for the stock. But what's the sense that you're getting with respect to the way crude oil prices are going and the fundamentals of ONGC? How are they stacking up?
Thanks, Avar, and thanks for having me on the show. Well, as a disclosure, we do have a positive coverage on ONGC. And along with this, all those positives that you had mentioned, one more positive as a tailwind is, of course, the higher crude oil prices. And whenever crude oil prices move up in dollar terms in the world commodity market, the immediate beneficiaries are the upstream exploration companies, case in point ONGC or Oil India or KN India, as a matter of fact, or even Reliance Industries. So, first of all, his question, we should hold on. Well, definitely you should hold on. Whether you should add more at current levels, now at 300 plus 306, your risk reward is definitely not favorable in terms of adding more at these levels. The reason why is on fundamental, we have a target of somewhere close to about 320. And I think it would be more prudent for him to keep his eyes on the crude oil market and the prices as well. Because once you see the cool off of global crude oil market, prices, we will see the correction simultaneously come into the exploration related stocks which are listed. So hold on to it, hope that you get an exit at close to 320, but don't add at current levels.
Okay, hold on to your stock, but don't add at current levels. The stock is currently trading at about 307. But let's also get in a technical perspective then and look at the way the stock has actually moved. You know, there's not, in the last 1 week, of course, in light of the way the markets have moved, it's gone up about 5%. And in the last 1 month, you know, we have seen crude prices really rally significantly. So piggybacking on that sentiment, ONGC as well has clocked in some very smart gains. So then come in on the technicals. What would you advise our viewer?
The advice would be to hold the positions. I am not sure the holding period is 3 months, 6 months or 1 month. But on the very immediate term, I would say the stock has picked up momentum. It has given a weekly breakout about 295, 300 kind of levels. It's given a good breakout with a decent amount of volumes. The momentum indicators are still strong. So I would also suggest that hold for target of 325 that I think can be achieved in next few weeks. One can have a trailing stop loss of 295 and hold on to the stocks. Beyond that, I think there will be some pressure in the sense that it has already seen a good amount of move from 250 to 60 levels week on week I'm talking about. There is some profit booking that is expected around 320, 330 levels. I think that can be a decent amount of exit levels for the immediate term. For somebody who wants to hold for a year or two, one can hold on for longer targets as well. But for immediate term, 325 is what I'm expecting.
Okay, that's the view coming in on ONGC on the fundamentals and the technicals, and I hope, Nishant, we were able to help you out. Next up, an email query been sent in from Sunil Kumar. Well, he says that he's got JSW Energy. He's got 1,500 shares of the stock. He's bought it at 73 and now wants to know, should he hold on or should he sell out of the stock? So remember, the company has been in focus as reports indicated that it's in talks to buy Monetpa's Odisha plant and that they have evaluated approximately 30 proposals for the power assets buyout. Recently as well, remember, the company had bought the Bina thermal power plant from JP Power. So let's get straight to it. 59 rupees is where it's currently trading at. Gaurang, a little bit of a volatile stock. What exactly would you advise our viewer over here? Do you think that the fundamentals remain intact, that the fact that all of this news is on the anvil is going to create some positive momentum in the long haul?
So I definitely think so, Avan, and as a disclosure again, we do have a coverage. But the problem, Avan, is the acquisition price of 77 and the stock trading close to about 60 or sub 60 levels. Along with those, added positive that you rightly listed down of acquiring more assets and adding on to the power generating capacity, there is one more trigger, which is the efforts by the government to make electricity power reach to the farthest most small village in India. And that is going to have an incremental impact. But all that to play out is going to take a little bit of longer time. On current levels of sub 60 or closer to 60, given that you bought it at 77 and you have 1500 shares, I would advise, some 20, 25% or 30% average so that your cost of investment comes down. This why? Because our target is 77. I beg your pardon. He bought it at 73. So it's at a favorable level in terms of averaging as well. And hope that with at least a year and a half kind of a time horizon, if you are able to average it out, you could easily get an exit at close to 77. And mind you, all these acquisitions of a capacity addition is going to throw in positivities as and when the acquisitions are completed and they add on to the power generating capacity. So on fallback of all these triggers, well, I think you should possibly average some quantity and look out for target of 77 long term.
Okay, at the current market price, Gaurang advises that you may actually take this opportunity to buy some more, average out your cost price and look out for targets of almost about 77. Of course, you would have to wait out for about a year. It's a long-term investment that you must watch out for. But on the technicals then, Gaurav, come in, JSW Energy. It's been a choppy ride for that one. Last week, it's risen about almost 3%. Just pull up the 1 month chart and see how JSW Energy has done. And well, it has been in the red for this one undoubtedly. So Gaurav, what would you advise our viewer?
I would recommend to exit. The only thing that in near term or in the medium term, I don't see too much of upside happening. It has multiple resistances ahead, and the trend is still not seeing any signs of reversal. Only thing is that it's the RSI is deeply oversold, so you can expect technical bounce, but then again the bounce can fizzle out around 60 to 63 kind of levels. And even if you hold for 6 to 9 months, I feel the maximum upside can see, in my opinion, is around 75 to 78 or 80 rupees at the max. So even then you would not make too much of money, and you have a very huge opportunity cost that you will be paying for if you hold it for 6 to 9 months. So probably I would recommend to exit at these levels. I don't think in immediate term you will be getting any benefits out of it.
Okay, unfortunately, the technicals are not forecasting a very good future for JSW Energy's stock, and Gaurav accordingly is recommending a sell at the current levels. But let's move on and get in his next query, and this one's on Motherson Sumi. Now, he says he's bought about 1,000 shares of the stock, purchased at a price of 320 rupees per share, and he wants to know whether to hold or sell. Gaurang, Motherson Sumi, now just to give you some bit of perspective on this stock, Goldman Sachs had actually come out with a very interesting note on this one. In fact, there was a downgrade to neutral following the kind of outperformance that we saw from about 280, 290 levels to a good 320. And do remember that there's a plant shutdown that is looming for them. In fact, remember, autos are planning to suspend production for maintenance this year. And it's expected that these shutdowns will stretch for longer. So the likes of Maruti, Honda, Hyundai, M&M, all of them are expecting to shut down most of their production facilities. So Gaurang, come in then on Motherson Sumi, purchased at 320. He's bang at the money. Would you say that he's probably bought it at the higher end of the price range that this stock trades at?
Well, Momina, the sad part of the stock market is you are never able to buy the stock at the bottom and you are never able to sell the stock at the highest level. So you have to live with this, and this is the reality of stock market. Having bought into Motherson Sumi, again a disclosure, we are having a positive coverage and it belongs to one of those auto ancillary stroke OEM segments. There were days when the stock had slipped to sub 250 levels when the entire European slowdown happened, large exposure of Motherson Sumi to that particular geography. And of course, some niche and marquee names in the international automobile manufacturing are clients of Motherson Sumi. Our belief is that the management has also given a verbatim that they are looking at acquisition, and they have already acquired some couple of small companies to have a reverse integration kind of a backward integration kind of scenario. If the stock slips to somewhere close to about 275, 280 or below that, I would say that first of all hold on to your investment, and at those levels you can definitely look at adding it. As far as your your comments on the inventory or domestic two-wheeler, four-wheeler manufacturing going slow on new orders, well, that is because they don't want to pile up too much of inventory, and you are virtually heading towards the year end. And in that kind of a scenario, no two-wheeler or four-wheeler manufacturing company would want to have too much of inventory, because equally difficult will be to sell those vehicles which are manufactured at an earlier year. So my sense is that yes, for the next for the next 1 or 2 quarters, the third and fourth quarter, there could be an overhang. But from a long-term perspective, all these negativities are going to transform into positivity. And of course, ever robust is the European market, and equally robust is the replacement market for this company. From a long-term point of view, we have a target of 355 on Motherson Sumi.
Okay, there you have it. That's the advice coming in on how you should be approaching this stock from a fundamental standpoint. 321 is the target. You're getting a thumbs up here. But Gaurav, let's take a look as to how one would position themselves when it comes to Motherson Sumi on the technical charts. Given the kind of move that we've seen at 321, do you think that it's poised to see some sort of a decisive breakout on the charts? What's the advice?
Well, the breakouts are not at these levels. It's been languishing at around 340 levels, and we've seen a lot of reversals happening from those levels. So technically speaking, 340 is one of the most crucial levels in the recent times, and once it sustains 340, then we can have a weekly breakout coming in. It can take it towards 355, and there's a monthly breakout, a multi-year breakout above 355 sort of zone where it can take it towards 380, 390 kind of levels. So I would rather wait, exit at these levels. Technically, I'm not saying the stock is not good, but again, it will be trading in a range. As long as it is below 340, the stock will not gain momentum. You can play for 10-15 rupees anticipating, but I would not recommend that actually. And above 340, one can have a stops of 320, 325, play for targets of 375, 380. At these levels, I would recommend to exit.
All right, that's a call coming in on Motherson Sumi. Let's just take a quick break, but after we come back, we'll be discussing our portfolio segment. So do come right back. Welcome back. Still tuned into Buy Now Sell Now weekend.
Well, we've got our portfolio advisor segment right up, so let's get straight to it. Ashish Madhavan is 36 years old. He's got 12 stocks in his portfolio. He's an investor. He's looking to stay put in the markets for the next 5 to 10 years. So let's find out how we can help him out. First up, he has a list of his entire portfolio. There's Ipca Laboratories, 570 shares at 884 rupees. L&T purchased at about 1748. He's got about 800 odd shares. Moving on then to some more large caps. Lupin at 1085. TCS features on the list, over 100 shares at 2400 rupees. He's got Adani Ports at 272, just about 735 shares. 209 is where he's purchased Finolex Cables at. He's also got some shares of Jain Irrigation, to be specific, 1600, bought at a level of 1,130, pardon me. Asian Paints, a large cap stock yet again, and he's bought that at 585 rupees, making some good money on those 85 shares. Petnet LNG, 275 shares, the buy price 183. Moving right on then, there's SBI from the PSU banking lot. 2,450 is his buy price. There's Bharti Airtel at 330, close to 50 shares. He's also got Aurobindo Pharma in the list. Around 250 shares bought at a level of about 160 rupees. So, if you take a look at the entire portfolio, yes, it seems to have diversification. There's sprinkles of various sectors, be it capital goods, banking, or even the pharma space. He does have a mix of large and mid-cap stocks. He's been caught on the wrong foot, though, with a lot of those investments. So, Gaurang, let's help him out. Start off with the first three names. What do you make of Ipca Laboratories? Given all that L&T has been through with its earnings, what's the outlook here? And how does Lupin look at 1,085, which is where he's bought it at?
So on the first three names, well, we do have positive coverage on all three of them. The problem is the acquisition price of Ipca and L&T. But nevertheless, at current levels, if he can definitely average, I think he will tend to benefit on all the three names. That is Ipca, L&T as well as Lupin. On Lupin, well, he should continue to hold on to whatever it is, but Ipca and Lupin, our sense is that if he averages out, he can get a profitable exit. This because Ipca acquisition price is much higher than what our target price is. Our target stands at about 660, and we are quite sure that all those negativities and the news flows that we've heard for Ipca in the recent times would be a thing of the past, and you will see a turnaround in terms of earnings. On L&T, well, the biggest trigger for L&T is going to be the Southern Facility investment in defense, and of course a larger contribution coming in from the core business. At somewhere close to about sub 1400 currently, my advice is that you can definitely average at least half the quantity if you can. Look out for target of 1590. Now these are very conservative targets from a year and a half kind of perspective. If the defense plays out well and starts contributing to a great extent, we'll revise the target upwards. On Lupin, continue to hold on to it. Our target is somewhere close to about 2070. Yes, again, this is one more pharma company which has faced the US FDA and the slowdown in US business. But with the new strategies and new products and new launches, we are quite sure that the earnings visibility will improve.
Okay, all three are whole calls, Ipca Labs, L&T as well as Lupin. Let's move on and get in a check on the next three stocks in his portfolio. First up, IT major TCS finds a place at 2,461 is where he's purchased it at. Adani Ports at 272, and lastly there's Finolex Cables as well where he's making some good money. So Gaurang, come in then on these three stocks. What's your perspective?
So TCS, again positive, we have a positive coverage, 25.10 is the target from a long-term point of view. On Adani Port, unfortunately no specific coverage, but in the similar sector, if you want to make a switch, then we have a coverage on a company called Gateway Distriparks, where our target is about 325. On Finolex Cables, well, a stellar performer over the last couple of quarters, have a positive coverage, hold on to it with a target of 460.
Okay, that's the view coming in. Some chops and changes, but by and large, a thumbs up on the stock. Let's talk about JN Irrigation then, and good old Asian Paints in the portfolio at about 500 bucks. He's making some great money there. Petnet LNG, does this one interest you?
Well, on JN Irrigation, again, the problem is the acquisition price at 130. And we did have a coverage on JN Irrigation at 60-65 with a target of somewhere close to about 95 or 110. I believe more or less those targets are in the price. Continue to hold on to it, but sell on rally. And if you want to make a switch from JN Irrigation, then at current levels, I would suggest switch on to Ashok Leyland. Have a positive coverage. Look out for target of 115 from a long-term point of view. On Asian Paints, we are extremely positive, and we are quite confident that this demonetization stroke consumer discretionary spend is going to take a back seat for a while. But from a long-term point of view, the demand is again going to come back. A new order market, replacement market is equally robust for Asian Paints, present in domestic as well as overseas market. We have a target of 1110 on Asian Paints, so hold on to it. On Petronet LNG, well, he's great in the money. Continue to hold on to it. We are extremely positive about government's alternative fuel consumption theme and the distribution pipeline to get revamped and laid as a fresh availability are issues, but we believe that from a long-term point of view, as government spends on the infrastructure of gas pipelines, this is one company that's going to get benefited. Importantly, the investment in Dahej is auguring very well for the company. We have a target of 430 on Petronet LNG long-term.
Okay, you can actually exit JN Irrigation on rallies and maybe switch to an Ashok Leyland, but Asian Paints as a whole, he's making some good money over there. Hold on for more potential gains. And Petronet LNG as well, very strong fundamentals for that one. So a hold call from Gaurang. But talking about the next three stocks, it's banking major SBI at which he's purchased, and Bharti Airtel as well has found a place in his portfolio. And lastly, Aurobindo. Gaurang, what would you have to recommend for these three stocks?
So SBI is a pre-split, acquisition price he's got. If he breaks it down, well, we are quite positive that the comfort zone will only increase. And if you see the stock slipping close to about 240, closer to 220 odd levels on any bad day, I would say that you can definitely go an average on State Bank of India, and somebody wants to make a fresh investment on State Bank of India, I would definitely reckon that. Long-term point of view, we have a target of 320 on State Bank of India, so hold on to that. Bharti Airtel, well, post the Reliance Jio launch and extension of that freebie offer till 31st March 2017 is only going to add to the earnings problem of the listed entities like Bharti Airtel, like Idea, or an unlisted entity like a Vodafone. So the time horizon for your investment in telecom has to be at least 2 years or plus, because that's going to be the time frame for these companies to overcome the competition and actually start revising the free services to a chargeable service. Hold on to it. We are target of 420, but mind you, you need to have at least 2.5 year plus kind of time horizon on Bharti Airtel. Aurobindo, great investment, great acquisition price. There is much more to go for Aurobindo. Hold on to it with a target of 940.
Okay, there you have it. That's the entire portfolio and all of the chops and changes that Gaurang has advised. Do take note of the changes that he's made in the portfolio. But remember that this is only a model portfolio. You need to consult your individual investment advisor before taking any investment decisions. Time to take a short break right here on the show. Stay with us. We've got lots more, including top stock ideas coming up.
Welcome back. This is Buy Now, Sell Now Weekend.
Well, let's focus in on some top ideas for you to watch out for on the technical and the fundamental side. Gaurav, run us through your top picks, given that the market staged quite a phenomenal rally.
Yes, based on the kind of momentum that we have seen in Nifty previous week, I have come out with two buy recommendations. One is buy on Glenmark. We have seen the stock trading in a range. Now there's some good amount of positions getting built. It's almost given a weekly breakout, so the closing also quite decent, and volume participation is quite good. Momentum indicators are quite strong, so I would recommend going long on Glenmark with a stop loss of 890, a very small stop loss target of 950 to 960. And the second recommendation would be buy on C8. This is another stock that has seen some amount of restricting its losses. It's seen a good amount of short covering. Momentum indicators are not turning towards the positive side, and I would not say that it's given a breakout on weekly charts, but it's almost on the verge of giving a breakout on daily charts. And with a stop loss of 1250, one can have a positional targets of 1350 in the stock that can be seen by next week.
Okay, two buy recommendations, Glenmark as well as CEAT. But time to get in some wealth creation ideas for somebody who has more of a long-term perspective, a time horizon of more than a year. Gaurang, come in on what would you advise such investors?
So got two investment themes from different sectors, both related to consumption definitely, and our sense is that this entire slowdown of consumption, etc., is only a matter of short to medium term. With that perspective, the first one is the consumer durable sector related company Voltas. Extremely excited about the renewed efforts of the management as far as the domestic and overseas markets are concerned, and we are of a belief that as we go forward, there will be incremental spend that will be available on the hands of an average Indian. And with the power availability, I think semi-urban and rural India are going to be huge markets for consumer durable companies. Voltas is the company that I'm talking about, consistent performer, good numbers. Third quarter, fourth quarter, maybe that might be a backseat, but next fiscal onwards, we believe that there's going to be tremendous tailwind favoring this company. With a target of 365, you can definitely look at buying into Voltas. The second one is also associated with consumption theme, but this is consumption discretionary. Tata Motors is the stock that I'm talking about. Positive numbers on JLR, continue to remain positive on the global numbers or JLR. Domestic brand Tata Motors should improve with the new launches, and of course, tailwind in favor of Tata Motors comes in from the L, M and HCV, that is light, medium and heavy commercial vehicle segment, wherein we are likely to see an uptick. And the most importantly, very recently we've heard about the Gypsies which were manufactured by Maruti will be replaced by the Scorpios that are manufactured by Tata Motors for the Indian Army. And that's going to be a huge impact on the numbers as well. And of course, armored vehicles are also going to be supplied. That's what we're given to understand. Now, if this all falls in place, we believe that from current levels, Tata Motors' downside is extremely protected. From a medium to long term, you can look at a target of 540 on Tata Motors.
There you have it, some top wealth creation picks as well as top technical ideas. Thank you so much, gentlemen, for taking time out and sharing with us your views right here on the show. And from everyone that put the show together, thanks for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.